Hello guys, welcome back to our today's class. This is the faculty Sudarshan. Now, in this session, we are going to learn about bonus and rights issue. Okay, and this session is completely about bonus issue. We will going to learn our concepts and we are going to apply it in our questions and we are going to find out our answers. So that's how the process will goes. Now give a heading bonus and rights issue and then give a heading bonus issue. For those who are watching this recorded also, watch this class at a standard speed, at a standard time. Don't deviate from the classes so that it will also be an kindly an interactive classes. If I ask any questions to the live students, the same can also be answered by the recorded students at their own place. Just try to interact and try to learn from us. So once give a heading. So a bonus share. What is meant by bonus share? It is the corporate action which has been taken by the corporates with issue of shares at a no cost to the existing shareholder. To the existing shareholders means who? The shares which is held by them already. For example, I am a shareholder holding a Wipro company, Wipro Limited. In Wipro Limited is one of the company, I say it in a practical way, Wipro Limited is one of the company which is continuously issuing the bonus share for the past 20 to 25 years. Regularly at the interval of 2 years to 3 years or 4 years, they will issue a bonus shares. 1:5 ratio, 2:5 ratio. What is meant by 1:5? What is meant by 2:5? That's what we are going to learn further. So, a bonus shares means what? The shares which is issued at no cost. There is no cost to the shareholder, but there is some cost to the company. So, I can say bonus shares are all shares which are issued at free of cost. That free of cost for the existing shareholder, for company, it has some cost. So, write down it means an additional share. It means an issue of additional share to existing shareholders at free of cost in proportion to their existing holding. In proportion to their existing holding. Recently, many company has issued a bonus share. If I tell it in a practical way, Wipro is one of the company based on the past trends issuing bonus share. Alternatively, and recently, the one of the banking sector company known as Karnataka Bank. Karnataka Bank is a listed company that is listed in NSE as well as BSE. This Karnataka Bank has announced a bonus share for 1:10 ratio. That too, holding before 23rd of March 24. Holding of share before 23rd of March 2024. Those who are holding, they are going to announce a bonus share. What is my bonus share? How many shares are going to be issued? It is based on the first number. It means free bonus share. The second number, that is a 10, that is a existing holding of the shareholder. Suppose a shareholder holding 20 shares of Karnataka Bank, they are going to provide you 2 shares. 1 share for every 10 shares held. Held means holding that share in that company. So this is a basic intro about the bonus shares. A bonus shares means an additional share issued to the existing shareholder at a free of cost in portion to their existing holding. That's what a bonus share. If they ask any true or false question, or if they are going to test you in theory-based question, you need to represent this. And if you have to give examples, it is well and good. So, as I told here, it is a corporate action. So the how the bonus shares, as I already tell, it is free of cost only for the existing shareholders. That is existing shareholders. It has some cost to the company. How the company has funded that cost? It is whenever the company is having accumulated profits, or else I can say huge profits. Where I can find the huge profits? In my reserves and surplus, I will find out. In that reserves and surplus, if there is a more profit, the conversion of profits into capital, conversion of profits into a capital, because a share is an equity is a capital, right? Capital item. So the conversion of an accumulated profits or the reserves and surplus into a capital is known as bonus shares. That is a capitalization of a profit. They will take that some amount of money from the reserves and surplus and they transfer it to a capital. So this will known as capitalization of profit. So write down bonus issue is also known as bonus issue is also known as capitalization of profits. Because it is given out of profits or reserves of the company. So in simple, I will say conversion of reserves and surplus into equity share capital. This process of conversion by issuing a free shares to the shareholder, existing shareholder, is known as bonus issue or capitalization of profits. Okay. So here, this capitalization reserves and surplus is your credit item, right? So it will does not impact the net assets. It will does not impact the net assets. What is meant by net assets? And net assets are those assets which are sold and repaid the outsider's liability. Whatever the amount left behind in the company, that is known as net assets. I sold all my assets and I closed my outsider's liability. Whatever the money left in the company, that is known as net assets. Okay, or else I can say net assets, or else I can also use the term net worth. Okay, so shall we go for an example? Shall we go for an example? Yes. Example. Write down issuing fully paid up bonus share. issuing fully paid bonus shares. So, let's say I have my existing shares of 1 lakh shares of rupees 10 each. 1 lakh shares of rupees 10 each. What is a bonus share? 1 share for every 5 shares held. 1 share for every 5 shares held. Now, how you will calculate the bonus share? That's a point here. So, how we will calculate? Bonus shares is equal to, what is my existing shares? 1 lakh shares into what is the ratio? 1 by 5. 1 by 5 is the ratio. So, if I calculate how many shares it will come, if I calculate how many shares it will come to 20,000 shares. 20,000 shares. So this shares I need to reissue. That I need to issue to the existing shareholders. Right? So what is the total number of shares? Total shares after bonus issue will be, what is my existing share? Existing share will be 1 lakh equity shares. Plus what is my bonus share? 20,000 equity share. What is in total? 1 lakh plus 20 is going to be 1,20,000 equity shares. It is 1,20,000 equity shares. So now I need to find out the bonus value. How I can find out the bonus value? Bonus value is nothing but, what is a face value? A face value is a value which has mentioned, which has instructed in the MOA of an company, of an organization. That is known as a face value. The minimum value that is fixed for every share. That should be authorized by an MOA with the signatory authorities and which has been submitted to the ROC also. That value I should calculate, not a market price, not any discount price. What is the current market value? That never I will take. For bonus value, for a transfer of reserves and surplus into a equity capital, I will only take out the face value. Okay, so what is my existing bonus shares? 20,000 shares into what is my face value? As I given in the example, my face value is going to be rupees 10 each, right? So it is going to be 10. So 20,000 into 10, what is my value? 2 lakh. So 2 lakh is the bonus value. This 2 lakh, I need to take it from my reserves and surplus and I need to transfer it to equity share capital. So this process of technique which is taken by a corporate action is known as bonus share. Is it easier to understand? So now we will getting into the topic of effects of bonus issue. What are the effects that can be happen if I issue a bonus share to the existing shareholder? That's what we are going to see. For point number 1, obviously there will be an increase in equity share capital. There will be an increase in equity share capital. That's your first point. Obviously, because in my previous example, my 1 lakh equity shares will now become what? 1,20,000 equity shares. That is an increase in the share capital. Next, my second one, decrease in reserves and surplus. What is my second one? Decrease in reserves and surplus. What is a decrease in reserves and surplus? How it will affect? Yeah, because this 2 lakh, how I am going to take? I am going to take it from reserves and surplus and put it into equity share capital. Let's say previously in reserves and surplus, there will be a 5 lakh. After this transfer, it has become rupees 3 lakh, right? So there will be a reduction in reserves and surplus. And basically, as I already told in the previous thing, there will be a no impact on net assets. There will be a no impact on net assets. Next, fourth one, reduction in EPS, that is decrease in EPS and other per share value. That is basically we can tell decrease in the EPS. Okay, we'll getting into the example for this. So first, let us understand what is an EPS. EPS is nothing but what is the amount of profit you are having. It is an amount of profit. Let's say I have a profit of 5 lakh. Okay. Before bonus issue, how many shares I am held? 1 lakh is my total company equity shares. Then what is my earnings per share? Earnings per share is rupees 5. Right? After bonus issue, what is an earnings per share? What are the amount which I give to the company? Let's say 100 rupees I am giving. Sorry. From that 100 rupees, the company is going to earn only 5 rupees after paying tax. After paying tax, the company is only going to retain how many rupees? Only 5 rupees. So after bonus issue, my earnings per share, my profit remains same. That let's say it is 5 lakh. What is the equity base? That equity base now becomes 1,20,000. Now give me a value. What is EPS? Give me a value in a chat box. What is the EPS? Give me a value. What is an EPS? What is the value of the EPS? Those who are watching recording also, you can also participate. Just take a calculator and find out and give me a value. 4.16. Now say, is my EPS is reduced or not? Yes, my EPS is reduced. So there is a reduction in the EPS. Next, this, as we have discussed earlier in this lecture, the students have told in the chat box also, the act will be considered in the market. So more the investors will come and more they will put it in the share market or in the stock market or in that specific share. So it will considered as your favorable act considered by the market. And one more important thing is that there will be no cash flow. Nothing will come into the business, nothing will go out of the business. No cash, no monetary items will be in and out to the organization or in and out to the corporate entities. So there will be a most important thing, no cash flow. Then one of them tell, some of them are tell there will be an increase in the market price. No, at the bonus share, there will be some adjustments in the bonus in the market price. Adjustments in the market price. I will never use it is a decrease in the market price. I specifically use the word adjustments because of the corporate action done by the corporate entities. I am slightly adjusting the market price to the lower value. It is not been decreased or increased. There is a different meaning for decreased or increased in the stock market portfolio. If the stock is increasing in the day-to-day market activities, it is increasing. When the stock falls down on a day-to-day activities, it is known as decreasing. Is there is an adjustment we are going to do that is done intentionally. Okay. Next, as we also said by one of the student that liquidity will increase. What will increase? Liquidity in the stock. That is, the more will come and buy the stock. So the share price will boom up. Okay. So there is a liquidity in the stock increases. So these are the 7 to 8 effects which you need to go through if you're going to issue bonus shares. Okay. On the basis, on the effects we have completed, now we will be move on to types of bonus issue. Basically, on the types of bonus issue, it is divided into two. It is divided into two. One is there is a mandatory section issuing fully paid bonus shares. Issuing fully paid bonus shares. It is governed by section 63, 63 subsection 1, 63 subsection 2. It keeps on going, but basically it is section 63. And there is something which there is another type of shares, but it is not given there. Okay. One is converting partly paid shares into fully paid. Converting partly paid shares into fully paid. This is known as bonus call. Okay. So this has been regulated by regulation 39 of table F. What is table F? Basically, in MOA, there will be 5 tables from A to A, B, C, D, E. So total A to E, there will be 5 tables. For AOA, there will be a 5 table for different types of company. Table F is applicable, table G is applicable, different company. From F, G, H, I, J. So total 5 tables for AOA also. So in the table F, in specification, there is a regulation 39. In that they have said about converting of partly paid shares into fully paid. As far as CA Foundation is concerned, this part is not applicable. In practically, this is also one of the area. For CMA Inter, this will also be applicable. Okay. For CA Foundation, it is only issuing fully paid up bonus shares is only they have given. Suppose any creative question can be tested from this bonus issue, they will may be tested from a converting of partly paid shares into fully paid. So now we will going into the each and everything in depth and we will understand with that example. This is your first part of your learning and then we will move to this. Okay. So issuing of partly paid. So we will take an example. Let's say we will take a practical example. The existing capital in an organization. Let's say I am having 5 lakh equity shares of rupees 10 each. 5 lakh equity shares of rupees 10 each. The bonus share I am going to issue is 2 for every 10 shares held. How much? 2 share, 2 for every 10 shares held. That is 2 share for every 10 shares held. Now say, what is my bonus share calculation? Give me a value. Those who are watching recording also, give me a value. What is bonus shares value? How you will calculate? 5 lakh existing equity shares into what is the number of shares? 2 shares going to, they give it as free of cost or with no cost and they divided by 10. What is the value? One lakh. 1 lakh equity shares they are going to issue. Now say, what is my total shares after bonus issue? What is my total shares after bonus issue? 6 lakh shares. That is 6 lakh. ES means equity shares. Okay, I will use the short term. In your exams, you will never use your short term. How the 6 lakhs has came? 5 lakh equity share plus 1 lakh equity share. Okay. So this is what we will do. Then give me a bonus value. Quickly give me a bonus value, dears. Bonus value is equal to 1 lakh into what is the bonus value I will take? What is the bonus value I will take? What is the bonus value I will take? Bonus value I will take rupees 10. So multiply by 10. Rupees 10. What is my bonus value? BV means bonus value, not book value. Okay, in this chapter, BV means bonus value. What is my value? 2 lakh. 2 lakh is my bonus value. This is what converting of issuing of fully paid bonus shares. Now, we'll come to second part of our learning. What is the second part of our learning? I will go with an example. I'll slightly change this example. Listen carefully. Existing base. What is my existing capital base? That is 5 lakh equity shares of rupees 10 each. Rupees 7 paid up. What is paid up? Rupees 7 paid up. What is a bonus scheme here means I'm not going to, there is a two-way approach here. One is asking the shareholder to pay remaining 3 rupees and then issue the bonus share in 1:5 or 2:10 or whatever the ratio. Okay, so that will be a one case. What is another case means I am not going to ask the shareholder to repay the remaining 3 rupees. Instead of asking them, I will myself as a company, by converting of a profits into a capital, I myself will pay rupees 3 for each and every shareholder and converting it. That is also another bonus scheme. Okay, so that is, what is the bonus scheme here? Convert partly paid into fully paid. That is a bonus scheme I am here using. So what is my yes, wait, here I committed one mistake. Sorry, due to some chat I have mistake. So this bonus value is not 2 lakh, it is 10 lakh. Sorry, it is 1 lakh into 10, it is 10 lakh. Bonus share is what? Bonus share is 1 lakh equity share. Bonus value is 10 lakh rupees. Okay, then coming back, bonus scheme is equal to convert partly paid up into fully paid. So here, tell me what is my final call due? How much is my final call due? How much is my final call due? That is equal to my bonus value. Okay, so my final call due is what? 3 rupees. Okay, so what is the number of shares I'm held? Total is 5 lakh equity shares into rupees 3. Then what is my bonus value? Rupees 15 lakh is my bonus value. Here I need to convert only 15 lakh from reserves and surplus to capital to ensure I have announced the bonus scheme. This is an alternative technique which is regulated in regulation 39 of the table F. Okay, so now we have studied everything, how the bonus shares will work, how the types of shares will work. Now our next purpose of our learning is where I get the rows, where I get the source. That's the main thing. So give a heading, source of bonus issue. Source of bonus issue. Here you will never change the order which you are going to write. You should strictly follow the order. This as specifically told extra in the previous session or in the previous few minutes before also, as I already tell, it has defined in section 63 subsection 1. Why I specifically use the term subsection? Why I have never used the word class? Because if I slightly I will go to the law and I will come back to accounting, something which is independent, apart, defined different from the section, that is known as class. Something which is dependent on section is known as subsection. Everybody understood? Because in section 2, class 20, that defines some company. I use the word class. Why it is a class? Because section 2 is simply definitions. 2 class 1 is something, 2 class 2 is different, speaks about different things, 2 class 3 speaks about different things, 2 class 91 speaks different things, 2 class 87 speaks different things, different definition. So I will here they will use class. But in section 63 is specifically for bonus shares. In bonus shares, what is the source? To issue bonus share. That is to issue bonus shares. That does specifically tell. So I will say it is a dependent on section 63. So I will use the term subsection. So section 63 subsection 1. Is it clarified? Next. Because we are only going to take reserves and surplus. So give a heading, reserves and surplus. Okay. So in this reserves and surplus, give 2 columns. One is issuing fully paid up bonus shares. That will be a one thing. And the next one is converting partly paid up shares into fully paid up. Okay. That was specifically told in, this as defined in section 63 subsection 1. It is defined in regulation 39 of table F. Okay. So you should follow the same order what I have written. Okay. First one is capital redemption reserve. As of now, you don't have very good clarity on capital redemption reserve. I will tell you once we have started with redemption of preference shares. Okay, so capital redemption reserve, basically we will call them as CRR. Okay, then the second one is securities premium. Second one is securities premium. That securities premium is further bifurcated into 2. One is in cash and the next one is without cash. One is with cash and without cash. What is with cash? If I tell you, what is a journal entry for passing a securities premium? By issuing a share, bank account debit. What is a journal entry? Bank account debit to equity share capital to securities premium. This is what the entry you will pass. Suppose when the vendor comes, when I purchasing some asset, for that asset I am transferring some shares. No, that is without cash. With cash means the shares which I issued and which is in the normal course of business. I am issuing a share, they will give me a consideration of money and I allot them the share. This is in cash. Without cash means I am purchasing some asset. Instead of paying in cash, I will pay it in my shares. So that's what without cash means. Next order will be capital reserve. Same thing. In cash, B. Without cash. In cash, without cash. Fourth one, you can tell as general reserve. Fourth one is general reserve. Okay. Or you can say it is a free reserve or revenue reserve. Okay. Then fifth one is surplus, or else I can go for profit and loss account. So this is an order or this is a structure you need to follow. You should not interchange it. Okay. So now it is about only just ticking it. For issuing fully paid bonus shares, I can issue capital redemption risk. It's the same thing of converting partly paid up shares into fully paid. I will never use it. There is a restriction in the companies. For securities premium, in cash, I will use. Without cash, for fully paid bonus shares, I will never use. In partly paid shares into fully paid, no securities premium will be used. For capital reserve, in cash, I will use. For partly paid shares into fully paid shares also, I will use. Okay. Without cash, in both scenarios, it is no. In both scenarios, it is no. General reserve or a revenue reserve or a profit and loss account, it is completely free. In any way, in any manner, you can utilize. So it is applicable for both scenarios. It is applicable for both scenarios. Free reserves, this two will call as free reserves. Okay. These two free reserves can be interchanged, can be used in any manner, in any proportion. If question something specifies, we will follow the question order, or else we will go with different purpose. Okay. This three sequence should not be interchanged. What is the first sequence? What is the first sequence? CRR. What is the second sequence? Securities premium. What is the third sequence? CR. CRR, capital redemption reserve. SP, securities premium. CR, capital reserve. In CRR, capital redemption reserve will be only utilized for issuing of fully paid bonus shares, converting partly paid bonus shares. Capital redemption reserve will be utilized, conversion not. In securities premium, there will be two, cash, without cash. For cash, we will use. For converting, we will never use. For without cash, we will never use. For converting, we will never use. In capital reserve also, we are having cash, without cash. For cash, we will use. For without cash, we will never use. For capital reserve, converting partly paid, we will use cash. We will never use without cash. So this is a thing you need to follow. You should not interchange it. It should be strictly followed in the same sequence. And here, there may be a different reserves you can come through. So as I given in the notes also, notes give important for exam. Okay. First one, everyone will come across revaluation reserve. What is meant by a revaluation reserve? A reserve, for example, you have studied this about in a partnership, right? That you will prepare a revaluation account. In a revaluation account, you have some calculation, 10% increase in the land or 15% increase in the building or 10% decrease in the building. Because of that, you may having some profits. That profits will be transferred to capital account. From capital account, it will be transferred to reserves. There's some entire process which you go through, right? That revaluation is something which is unrealized, which I never converted into cash, right? So that unrealized reserves, I will never take it into purpose of calculation of, I will never take it in the source of bonus issue. So revaluation reserve cannot be utilized. Revaluation reserve cannot be utilized for issue of bonus shares. And there may be some doubt. If something, the word very simply given, securities premium, whether how I identify it is in cash or whether it is without cash. That's what we are going to do it, as I always use in my class, QRSA, question remaining silent, answer. QRSA means what? Question remaining silent, answer. If it is in case of securities premium, and if it is in case of capital reserve, there will be two choice. What we are going to assume. Okay. Securities premium, always assume it is realized in cash. While doing a sum, if nothing is given, always assume it is realized in cash. For capital reserve, not realized in cash. You should assume it is without cash. If something capital reserve is given, you should assume it is without cash. Okay. Next, what is a free reserve? Is many as having a doubt. Free reserves are the reserves. Write down. Free reserves are the reserves which are available, for distribution of dividend. Distribution of dividend. Okay. So that's what the thing we will use. Okay. This is a 63 subsection 1 is only there in your entire foundation thing, but section 63 subsection 2 is also needed to understand better about the bonuses, to have a practical view on it. So that's what the thing which as they have given. Okay. Now we will move on to section 63 subsection 2. Specifies about the conditions to be satisfied or conditions for bonus issue. If I want to issue bonus shares, I need to follow some conditions. I need to fulfill some conditions. Let us discuss what are those conditions. First, it should be authorized by the MOA. Sorry, authorized by the Articles of Association. That is AOA. Okay. Suppose if this Articles of Association is not authorized, what if not? What if not authorized? Then alter. You should alter the Articles of Association. Then your second point. Board of Directors. Board of Directors have to recommend and get the shareholders approval in which meeting? In the general meeting. It's a basic thing we need to follow. Next. Second, what if there is a default? What is a default? Default or non-repayment or something, what will happen? There should be no default in two things. One, in repayment of principal. Next one, payment of interest. In whatever the things it may be, It may be for deposits or any debt securities. Any debt securities issued by it. There should be a no default, no contravention or no anything for a non-repayment in repayment of principal and payment of interest. Next, most important thing, there will no default in statutory dues to the employees. What are the statutory dues to the employees like PF, bonus or gratuity or pension like that? There should be no statutory dues to his employees. That is contribution to provident fund like that. Then major condition is important condition. Put it as an important condition. Existing shares should be fully paid up. Existing shares should be fully paid up. What if not fully paid up? Whether they said existing shares should be fully paid up. There will also be a possibility that if not, what if not? If not, then you will have two options. Then you will have two options. Option 1. Option 1. Make the final call. And receive money from the existing shareholder. Okay. Receive the money from the existing shareholder, which will make the existing shares fully paid. Existing shares fully paid. Okay. So there may be also a case in case of call scenario, what I will do. In case of call scenario, what I will do. Company will forfeit the shares. Company will forfeit the shares. Okay. On forfeiture, from whom they will do? Forfeiture of shares from the shareholders who is not making the payment. After that, and then issue bonus shares or issue a bonus. Okay. So you have seen option 1. What is my option 2? Option 2 is very simple. That's what we have seen. Make the shares fully paid up by way of bonus call. By way of bonus call. Okay. Then that's what your 5th point, most important point. Then your 6th point, it should comply with the conditions as may be prescribed in SEBI ICDR rules. Okay, so write down should comply with conditions as may be prescribed in SEBI ICDR. ICDR. Write down, writing ICDR, write down issue of capital and disclosure requirements. Issue of capital and disclosure requirements. ICDR. Okay. And the utmost point under point 7 is also another point. Most important point. The bonus shares will not be, or you can also use the word shall, should not be. The bonus shares should not be issued in lieu of dividend. What is meant by in lieu? In lieu means instead of. Instead of paying dividend, don't pay bonus shares. That's what the condition that has been prescribed in Companies Act 2013 as well as SEBI ICDR disclosure requirements also. If you're going to pay bonus shares, only pay bonus shares. If you have an intention to pay a dividend, instead of paying a dividend, don't pay bonus shares. That's what a condition which has been specified as per the Companies Act. Okay. This has been specifically tell. Then, another most important point. The company which has announced, write down, the company which has announced the decisions of the board recommending a bonus issue, recommending a bonus issue shall not subsequently withdraw the same. So from the main condition is, if you are recommending for the bonus issue, you should not subsequently withdraw. Once it has been announced, you should give it. Okay, so that's what they have clearly mentioned in the Companies Act rules. There is one more important thing is that there is something known as SEBI regulation, which we need to fulfill for some cases. What is the tenure, what is the days, how many days I need to wait, how many days I need to issue a bonus share. Like this, some calculations will be there from rule 2, from regulation 293, for regulation 294, for regulation 295. Previously in a CA Inter it is there, but as far as this curriculum for CA Foundation as well as CMA Inter is concerned, that specific SEBI disclosure is not there. So regulation 293, regulation 294, regulation 295 is not there in your syllabus. So you can just study this and you can move on to a sum. Okay. If it is required, I will give it as a bonus thing to you at the end of the lecture. Okay. I will give it from my end as a bonus thing to you for your learning purpose at the end of the session or end of the completion of the course. I will give you. Okay. That you can use it for your learning. Now, come to our accounting part. As of now, we never studied about accounting. We have just studied about how to do a bonus share. Now, how to pass a journal entry towards the bonus share. So write down, give a heading, journal entries. Okay. This is a journal entry. First, we will discuss of issuing fully paid up shares. Issuing fully paid shares or fully paid up shares. Now, first one, for bonus issue, I need to arrange a source, right? What is the order of the sources? For that, I need to pass one journal entry. What is the journal entry I need to pass? What is the journal entry I need to pass? Follow the order. What is an order? What is my first order? Give the answers in your chat box. Those who are watching recording also. Open your mouth and say, what is my first order? Capital redemption reserve account debit. What is my second order? Securities premium account debit. Then what is my third order? Capital reserve account debit. Then general reserve account debit. Profit and loss account debit. Two, bonus to equity shareholder I will write, or bonus to shareholders I will write. Anything is comfortable. Account. That's what the journal entry I need to pass. First journal entry. My second journal entry on issue of bonus shares. Actual issuing of bonus shares. On issue of bonus shares, I will pass a entry bonus to equity shareholder account debit. To equity share capital. To equity share capital. Now let us decode the journal entry, how it is debited, how it is credited. Listen carefully. Now, this is a balance sheet, Appa. This is a balance sheet. Now I will take it as a horizontal balance sheet for an explanation purpose. Which side you will write securities premium, or which side you will transfer your profit? It is a capital plus profit. You will write down total profit here. You will transfer general reserve here. You will transfer securities premium here. So all these items is on the liability side. This liability side is known as credit balance, correct? All the debit balance will appear on the asset side. All the credit balance will appear on the liability side. So this credit at the first time, let's say this capital redemption account, previously there is a 5 lakh. Now, for the purpose of the calculation of bonus issue, I'm going to take this 5 lakh. What it will automatically do? My credit balance will comes down. In the basics of an accounting class, I will use the modern approach of accounting. I will give you one word called dealer. Whenever the liabilities decrease or an equity decrease, you should debit it as per a modern approach. So as per a modern approach, as a credit balance from 5 lakh, my entire 5 lakh is going to withdrawn. So my entire 5 lakh will comes down. My capital redemption account will going to comes down. So I will debit it. Same in case of securities premium. Securities premium will have a credit balance. Now that credit balance is completely washed out and I'm going to utilize for the purpose of bonus issue. For that utilization, I am using securities premium. So it has decreased. So I am going to debit it. Same in case of capital reserve, same in case of general reserve, same in case of profit and loss account. Then why there is a credit account called bonus to equity shareholders account? That account is a temporary account, that is a dummy account which has created for the purpose of bonus issue. Okay, I may not give them an individual name. A is holding this share, B, C, D. So in put together, I will say it is a bonus share which I am going to accumulate and going to distribute to equity shareholders. So I will use the term bonus to equity shareholders. On the issuing of actual issuing of a bonus shares to the existing shareholders, I will use the term. I will cancel this account. I will write off this account as a dummy account. I will debit it. Then it will automatically cancels. bonus to equity shareholders account to equity share capital account. By crediting the equity share capital account, I have converted my reserves and surplus into capital. So that's how the corporate action bill works. Okay, so this is for first concern. What if the cases of the second one, converting, maybe the sum can be tested, the sum can be tested for you as well. So converting partly paid shares into fully paid. If you focus on concepts, by doing the sum will be a cakewalk for you. You can easily do it, easily crack this exam. So always focus on those concepts, remember the concept, relearn the concept, and then do a practical problem. It will be a cakewalk for you. First one, I need to make the final call. The final call entry should be passed. What is my final call entry? I will pass. First one, equity share final call account debit. This is a basic journal entry which you have learned. Equity share final call account debit to equity share capital account. To equity share capital account. That's the entry I need to pass. Then, based on the entry I have passed, I need to allocate the resources. Next one is allocation of resources. What is an allocation of resources? Here, what is in order to follow? Only CR is available. That is capital reserve is only available. So capital reserve account is available. Then what is the one more account is available? General reserve is available, right? General reserve, that is free reserves or revenue reserves is available. Then there is a one more thing, which is profit and loss account is available. There will be one more important point for securities premium, which I take to the module and then I will put it in your memory very strongly. Then I will create a dummy account called what? To bonus to equity shareholder or bonus to equity shareholder account. Okay, that's the entire will pass. Now I need to make an adjustment towards the final call. Now I need to transfer the resources and I need to make it as a final call by completion of a capital entry. I need to pass. That is, I will cancel my dummy account, temporary account, bonus to equity shareholder, account, debit to equity share, final call. So this is the entry I need to pass. Okay. This is the entry I need to pass. Okay, there's the same logic has been applicable for this also. Then there may be one more doubt. You have seen or you have come across few terms. Authorized capital, issued capital, subscribed capital. Like this you come across basically. An authorized capital is a capital which has been authorized by an MOA. Having mentioned it in an MOA, it is alternatively known as nominal capital. It is alternatively known as registered capital. Authorized capital, nominal capital, or registered capital. Now, shall I go beyond authorized capital? Shall I go beyond authorized capital? You should not go. If you go, you should pass some resolution. Okay, issued capital and then subscribed capital. Everything authorized issued capital is a part of an authorized capital which is issued to the shareholder. Subscribed capital is a part of an issued capital which has been subscribed by the shareholder. This is a basic meaning you need to go to. So, what if happened? Issued and the subscribed capital is greater than authorized capital. Let's say issued capital and subscribed capital is greater than authorized capital. What I will do? For example, my authorized capital, my authorized capital is 10 lakh equity shares of rupees 10 each. That is what my authorized capital. Okay. My issued and subscribed capital was 8 lakh, or I will say 9 lakh equity shares. 9 lakh equity shares. For example, bonus issue was 1:3. 1:3 was a bonus issue. What will happen? 1:3 in that case. How many bonus shares I need to issue? How many bonus shares I need to issue? How many bonus shares I need to issue? I need an answer in my chat box. Those who are watching recording also, just reply with your answers. 3 lakh equity shares, right? 3 lakh equity shares I need. Now, what is my total number of shares after bonus issue? What is the total number of shares after bonus issue? If you add this and add this, 12 lakh. Nice. 12 lakh equity shares is I need to issue. But what is the maximum capital that I can issue, which has been authorized in my MOA? Which has been authorized by MOA? 10 lakh. Okay. So what it will actually incur? It has exceeds, right? So there is something you need to take care. In this case, you have an ordinary resolution should be passed. Which resolution should be passed? Ordinary resolution should be passed for increasing the authorized capital. Increasing the authorized capital. So, for that purpose, there is 2 ways to do. How many ways to do? 2 ways to increase. First way, additional number of shares required. What is the additional number of shares required? What is the additional number of shares required? What is the additional number of shares required? Those who are watching the recording also, you can also participate. What is additional shares required? Good. 2 lakh equity shares is required. So I will only pass a resolution for 2 lakh equity shares. Or there is an alternative approach, that is number of bonus shares issued. How many bonus shares is issued? How many bonus shares is issued? 3 lakh, right? So 3 lakh equity shares. For that 3 lakh, I need to pass an ordinary resolution. So which approach you will take? We will go with an ICA or ICMA approach. That is ICA approach. That is all the institutes approaching, not only an ICA, ICMA and everything they are approaching. You should only give an authorization for an additional number of shares required, not for the entire bonus issue made. Okay, so ICA is approach how much? ICA prefers this approach, so we will also follow this approach. Okay, and you may also come across in this chapter to prepare a balance sheet. To prepare a balance sheet, you may come across that is not an entire balance sheet, it is an extract copy of the balance sheet. Okay, so for that purpose, we will give you some tip on it. That is balance sheet disclosure. What is it? Balance sheet disclosure. What is a balance sheet disclosure? In the balance sheet disclosure will be like this. You will write an authorized capital. Authorized capital will be there. You will mention about the authorized capital, about the purpose here, and then you will move on to, you will give a amount here, and then you will move on to issued and subscribed capital. Like this, you will prepare in your notes to accounts. Okay. At the time, issued and subscribed capital, what you can do after writing the number of shares, let's say, for example, 5,000 equity shares of rupees 10 each. Then, for that purpose, in that 5,000, you need to do something. What is it? Write down along with me. Out of above dash shares at dash rupees each were issued by way of bonus share. By way of bonus or by way of bonus share. This is what you need to do. Or else I will give an example over here itself. What is my current actual issued capital? 12 lakh equity shares of rupees 10 each. Right? Now I will write a line out of above. How many is my bonus share? 3 lakh shares at rupees 10 each were issued by way of bonus. This is a balance sheet disclosure in notes to accounts. If they ask, we need to give it to them. Are you able to understood this? Are you able to understood this? With this, we are completed with the conceptual learning of bonus shares. Is it easy? Are you comfortable with the language? Are you comfortable with the speed? Everything is done? Fine. So we are meeting in a tomorrow session. In the next session, we will do a sums and we will do the topics. Okay. With this, signing off of Sudarshan. Have a nice day.